We got some big news for Vertiv stock investors as the company's management team elaborated on the impact of tariffs on its business. So I'll discuss what these details mean for Vertiv stock investors and update you on my thoughts about this business longer term.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
The management team in the recently completed earnings call with Wall Street analysts said the tariff situation remains dynamic and fluid, with the tariff perimeter changing frequently, and this can create inefficiencies in the playbook and execution as we adjust to a changing landscape. And I've talked about that a lot. I've been seeing this statement in different forms from many management teams. And it makes sense intuitively, even if management teams were not saying this. I can understand this is what's happening inside businesses trying to make decisions. It's not just the impact of a higher tariff. If that were to be the case, that would be a lot easier to manage if it was just, okay, we're going to have a 20% tariff. Boom, done deal, finished, right? But it's not just that. It's 20% one day, 10% the next day, then it's paused, then it's 50%, then it's 10%, then some of your competitors have an exclusion, then some of them don't, then there's this, then there's that. And so it's difficult to make a decision when the tariffs are always changing. You can't make a forward-looking decision as an owner, as an operator of a business, when you don't have the information to make the decision. So the only information that businesses have right now is that the situation will be changing. So that's the one thing that they can count on, is the fact that things will be changing, things will be volatile. So don't make a decision expecting whatever the numbers are today to be the numbers 3 months from now or 6 months from now, because those will likely change. Also, the other non-tariff trade barriers are frequently changing as well. And so that's the more difficult part of this whole situation in the increase in trade barriers, is the uncertainty, the changing, the continuous ups and downs that makes it difficult for businesses to make decisions. And Vertiv is yet another management team that's pointing this out. Like, the more difficult thing is the frequent changes. So Vertiv is informing investors based on what they know to be true as of July 28th. So they're vigorously executing their countermeasures, and they believe tariffs will be materially offset exiting 2025. So businesses are making decisions to counter the changing landscape as a result of tariff. There's increasing cost, there's changing competitive landscape, and there's the extra uncertainty. So management teams have to adapt to those changes, and they have to make plans to account for these changes. So they are deliberately increasing spending in engineering and research and development capacity and go to market to fuel growth, because they're also in a market with artificial intelligence where demand is increasing. So they're spending more because customer demand for their products and services is there. So they're fine-tuning their supply chain as a supplier accelerate their localization efforts to address the tariff situation. So businesses are doing what they can with their supply chain to adjust for the increase and the uncertainty. There's some room for them to negotiate with their suppliers overseas to absorb some of the higher cost. They're localizing wherever they can. If they can incrementally add local produced product, they're doing that. That in some cases, that's not an option. Some cases it is an option. And then they're also increasing prices that they charge customers. They're also changing some of their product portfolio based on these new conditions. Maybe a certain product in your portfolio doesn't make sense anymore, so you might have to discontinue that product altogether, because under changing circumstances, that product is no longer a profitable product. The management team did say that their supply chain is resilient. As growth accelerates, their capacity expansion strategy continues to be two-pronged: strategic manufacturing and service investment ahead of anticipated growth. Capacity liberalization through vertical operating system productivity improvement. So they're expecting this increase in demand to continue for several years. And so they're investing ahead of that anticipated growth in the future, which I think is a reasonable decision given demands for its products and services, given demands in the data center market for optimized for artificial intelligence. Likely looks like there are several years of growth ahead. By the way, this document I'm reading from is the company's most recently completed earnings call. This highlighted document I made available for my channel members, and you can join for less than $5 a month. So I updated my discounted cash flow valuation for Vertiv. I now value this business at around $85 a share. Current market price is $138 a share. Remember, in the last month, the stock is up almost 15%, while the S&P 500 index is up by less than 3%. So it's outperformed the index over the last month. Investors are enthusiastic about Vertiv Holdings. Its prospects are solid, and it's no secret to the market. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.